Hello guys, welcome back to Global SMC Forex Trading. I hope you are having a new week. Today is 14 November 2022. We are going to do another topic, which is another very important topic that people they actually really don't consider much about it, but it's a very good topic, which is risk management. So you're going to see that as you're having your forex trading journey, you're supposed to know what you are doing, or the way how you're going to be executing your trade in terms of risking, even in terms of rewards. So in short, what I think I can say about risk management, they are just saying is risk to reward ratio. Is risk to reward ratio, the amount of money or anything that you are trading, the risk that you are taking as the reward that you are anticipating. You understand? This is actually what risk management is this. So you're going to see that a lot of traders they leave forex only because they didn't digest this topic and understand what it really means. So you're going to see that sometimes the reason why people blow their accounts, or they are blowing those big accounts or even the small accounts, is only because they are not even understanding this topic, how it works, or how it delivers according to what they really want. Okay, let me just check the video and see if it's recording nicely. Okay, it's recording nicely. So now the question that you have is, so how do I go about it, or how do I manage, or how do I make a system of risk management? So on risk management, you are saying that only like one thing that really matters the most when you are doing risk management, which is something called what the lot size, which is something called the lot size. This is something that really determines whether you're going to be a very good forex trader or a bad forex trader. So in terms of lot size, me, I'm not actually a financial advisor or someone who tells people that you have to use this specific lot size or specific amount on every single trade to execute it in terms of losses or profits. No, but what I can just tell you is that whenever you enter your trade, right, just try to make sure that you are, when you're entering your trade, just make sure at least you risk 0.5 0.5% 0.5% to 1% trade per every entry, or per every entry. What do I mean by this? Right, what do I mean by this? Let's say you have maybe $20. We are just saying, at least when you are having a $20, make sure that when you are having a trade, don't risk more than $2. Don't risk more than even a dollar. 0.5 it will be a dollar. 1% it will be $2, right? So what are we saying now? If you practice this kind of trade, right, you are going to see that with time, or okay, let me give a real straight example like this one. Let's say here you have $20, right? You have $20. You want to implement the thing that I have told you. You have $20 here, right? Let me increase the so that a lot of people can see, right? Like this. Let's say you have a $20, right? You have a $20. How do you do your risk management, right? So risk management, you are saying you have to at least risk what? You have to at least risk 0.5% to 1% per trade, or per every entry that you have, right? Per every entry that you have. So in practical, what are we saying? Let's assume now that we have decided to say, I'm teaching you how to make a system, right? Let's say now I've decided that per trade I'll be using 0.5%, which is something that I even also like, right? 0.5%. So we are actually saying 0.5%, right, is like we are risking 0.5%, right, is like we are risking dollar, we are risking dollar per trade, we are risking dollar per trade, right, we are risking dollar per trade, right. So you're going to see that if you are risking a dollar per trade, you need if you are risking dollar per trade, which means you need 20 trades for you to what, for you to blow your account. You need times 20, which is equal to $20, right, like this. So we are saying you need 20 chances or 20 trades for you to what, to blow the account, right. This is realistic, or the actual thing that you're supposed to know, right. So if you are really a good trader, or if you are really someone who knows how to execute or to do your trades, right, let's now assume that here we're saying to block the account, right. We are now in the actual trade, right. Let's say we are now, you have your $20, right, in journal trading, right. Okay, this is now your $20, right, that you have now, and you're saying, today I really want to trade this $20. How am I going to be trading it, despite this system that I've told you, like how to actually really manage your account, right. You have $20, right, and you're saying you are risking like a dollar, right, like this. You are risking a dollar, like this. Okay, this is a dollar, like this. You are risking a dollar. At the same time, for the target, you have told yourself that per target, no matter what happens, I'm going to be targeting what, let's say $5. You are targeting $5, right. Let's go back to $5, right. You are targeting $5. So you are going to see that in terms of risk to reward ratio, to people who are really good at mathematics, we're just saying it's 1:2. This is like 1:5, right. So now this one is what we are calling the risk to reward ratio. You are risking 1:5. This one is the reward, this one is the risk. So let me write it so that you understand what I'm saying. This is a risk, this is a reward, right. Let me label it. This is a risk, and this one is a reward, right. This one is a reward, right. This one is a reward, right. So what are we saying now? For you to blow the account, or for you to say, oh, my account did you have blown, you need 20 trades, right. And for you to double your account, you need like 4 trades, right. So now let's be realistic, right. Let's say you decided to enter 20 trades, you did your what, your 20 trades, right. You did your 20 trades like this. Maybe you saw your position, you are a smartphone trader, or you are a retail trader, or whichever method that you use, right. You implemented this risk management strategy, right. Let's say you have 20 trades, and for these trades you have realized that, or you failed, maybe you failed like 18 times, maybe you failed like 18 times. Of course, by this time, maybe your psychology and all this mindset, you have been distracted, and you have passed 2. You understand, you have passed 2, right. This is you are in the trade, maybe you're a beginner even, or a professional. Psychologically, if you are in this kind of situation, I know, like, it will even make you panic, like, how would I lose so much trade like this, right. But you're going to see that for 18 trades, right, that you have lost, right, what are we saying? If you were risking a dollar, as I said, these 18 trades, right, is going to be what? This 18 trades is going to be what? $18 loss that you have made, right? Right? So now, back to the rewards. for the two trades, right, we are saying we're targeting $10, right? We're targeting $5. So for two trades, right, you now have what? You now have $10 maybe profit, or $10 profit, like this, right? $10 profit, right? So what are we saying now? If we are to subtract this and this, right, you're going to see that in your account, right, you now have like what are we saying here? Okay, to people who really understand mathematics, this is what we are saying, right? So we are saying overall, you know, we have what? $8 in your account, and you came all the way from $20, which is 20 trades, or let's just say $20. This was your $20, right? Let's say $20, right? Like this. So we are saying at the end of the game you have $8. So imagine now you've done 18 losses and you just won 2, but you have $8. It's something that is quite impressive, no matter how much you lost or whatever happened in your trade, but you still have what? A profit. So how do you do it? Now let's assume again that let's say you won half, you won 10, right? You won 10 like this, you won 10, or here maybe you lost like 10 again, maybe half. So what are we saying here? You have a what? A $10 loss. Here what are we saying now? You have a what? A $50 profit. So at the end of the game you have what? You have $40 profit. So you see now, so this aspect of risk management, it really tells you, or it really place you in a position that really determines that are you a profitable trader or not. So despite that you're losing or you are winning, you just have to know the amount of risk that you're putting per every trade, so that overall if you calculate it, you'll be surprised that maybe you've just lost like even $5 or $8, right? So it doesn't matter whether you lost or you lost how many times. Just have a system or a rule that you tell yourself that no, me per every trade I'm risking 1:5, right? I'm risking 1%, or I'm risking 0.5% of my capital, rewarding this, right? So for every entry that I'm going to do, even the trade missed, your trade with how many pips or whatever, you're not even going to be doing that unless your rules are met. You understand? This is what we call a system, or this is something that really differentiates people a lot, especially professionals and beginners. Once you start to grasp this kind of information, you start to become a profitable trader. So now what are we saying now? Let's place it in real market, right? This is the real market, right? Let's say, or let's assume that maybe I have entered my trade here. I don't know, maybe as of me, what would I say? Maybe, of course, maybe I have seen this very nice. Let me find a position where I won't interrupt that information. Let me find another entry, right? I like this one. This is me, and I have found my very nice supply maybe entry, and maybe I've done my work off thing or my entry strategy, and I found out that I have to enter here. If I enter here, what am I saying, right? Of course I'm targeting the short here, right? So what am I saying, right? You're going to see that here, this is where you see the risk to reward ratio. I think you can even see here is return risk to reward ratio, right? This is where you see, or you allocate your trade, that if you want to risk this percent, make sure you're gaining 5. You understand? Make sure you're gaining like 5%, or maybe not 5%, like you're gaining 5 times the amount that you're risking. This is how you see the lot sizes. But as of me, I would rather choose a very minimum stop loss, so that maybe I also even reduce the length of where I'm going to be targeting. So it's something that you practice with time, and with time you're going to see that even this pace itself, if you're someone who really knows the time frame that I mean, which is 1 hour, it's a really a lot of money, and at the same time it's really a big loss depending on your account that you have. So this is what I'm just trying to tell you. This red part will be the loss, and this blue part will be the profit. So imagine you have a system that is just telling you that I'm just risking this no matter what, I'm gaining this no matter what. This system is going to help you to even get desired trades, right? So actually I think this is just a recap, or an intro to risk management. I can't go deep on one video, but I was just trying to tell you the brief of how you can do it. But in the next video I'm going to go deep with it, so that to people who want to use it, you'll use it on its depth. So as a recap now, what are we just saying, guys? We are just saying, when you're trading, be able to know what is called risk to reward ratio, which is risk management. Risk management, are just saying, know the amount of money that you are risking to the amount of money that you are willing to get, or the reward, right? After knowing that, this is where we implement this lot size for the traders, or for the people who know how to execute the trade. You know what a lot size is, which is something that I can't really tell you that you have to use your lot size 17 or 25 or 50. No. But what I can just tell you is, per every trade, no matter which lot size you are using, just make sure that you are using, or you are risking 0.5 to 1% per every entry, or per every trade, right? So you are going to see that for the people who really have $20, right? If you have $20, right, and you're following what I'm telling you, the 0.5 or 0.5% to 1% risk to reward ratio, you're going to see that for 0.5% you have like I think how many chances here, like dollar time, like 20 chances of getting yourself involved in the forex. And at the same time, you also even have like 10 chances to also involve yourself into forex trading, right? So as you start to build this kind of system, or as you start to be able to know how you can go about all this is now the actual trade that I was showing you guys. Let's say you have $20, and they're saying you are risking dollar to get $5. So for dollar, we are saying this is 0.5%, right? This is 0.5% that you are risking. Maybe the reward is around maybe 5 or so percentage, right, per every trade, right? So you're going to see that if you are risking $1, you have 20 chances to trade, and the chances to trade before you blow your account, and you have 4 chances to actually double or make profit. So you're going to see that if you put it into practical use, let's say you have 10 to 10, or maybe you did 10 trades, 10 profit, 10 losses, 10 profits. If you were getting the $5 per every win, probably you have what? You have $50. If you were doing the same here, dollar per every 10 losses, you have $10 loss. So if you subtract them to see your equity or your balance that you have, you're going to see that you have like $4 profit. So at the end of the day, we are always profitable. So here, in terms of losses and wins, don't be discouraged about this. It's just a matter of understanding risk management. So as of me, I would say risk management is something that will actually tell you that are you a trader, are you a profitable trader, or you're not. So this is all that I had for today. I hope you understood, and I hope you're going to take it into practice. Thank you.